Everyone joining us, good afternoon. Just one more minute, we're going to get started here. We've got some late arrivals showing up. 1 minute. All right, good afternoon, everyone. Welcome to the Q1 2023 Investor Q&A. Obviously, it's Q2 now, but we're reviewing last quarter, and we're going to talk about what we've got coming up ahead. Appreciate you all taking time out of your afternoons and evenings to join us today. I'm Adam Lundy. If you haven't met me yet, welcome. If this is your first Q&A with us, welcome. If this is your first time coming up at the end of a quarter with us, we're really glad to have you along the journey with us. We look forward to sharing with you where things have been, where things are headed, and then of course giving you a chance to bring up any questions you have that we can help you get answered today. So before we get started, I'll introduce those members of the team who are here with us today. Ramesh Nachpan, Investor Relations, is on with us today. Don Spafford, Partner, also Investor Relations, is on with us today as well. And Rick Liebman, CFO, is on with us. I believe that is everyone from the team today. Co-founder Justin Hoggett is out today testing to get his pilot's license. So good luck to him on that. And let's get started. So agenda for today is we're going to review what the year's looked like thus far for us, for an industry as a whole. We're going to talk a little bit about what we're seeing going forward for the rest of the year. And then, of course, we're going to talk about some upcoming events we have. And then, like I said, I want to leave plenty of time to keep the floor open to you to answer any questions you have, given that this is a Q&A, and that is our purpose of being here today. So let's take a review, take a look at the quarter, where we have been as a company, of course, where the industry has been. So big update, or I guess no significant updates for us as far as the acquisitions front goes. We did close out 2022 with 5 properties in the portfolio. We unfortunately have not closed any new properties in 2023 year to date. However, of course, we will talk a bit about why that is, and of course, some of the things we are doing to adapt to the current market right now. Some other updates with the company is we have added a new member to our team who's in charge of construction and projects. So that means that when we have a capital improvement plan that comes along with one of our new campgrounds, an expansion plan, adding more amenities, we've got a gentleman who handles that. And I'll tell you, he has already paid for himself in the amount of money he's been able to save us, coming in under budget on some of the projects he's taken on. So a huge asset to the team. Chad Swenson is his name. We'll have him introduced here on a future call, hopefully soon. He's definitely busy this afternoon dealing with some of our projects right now. We've made a focus because we have not acquired any new properties. We have put our focus really heavily this quarter into our existing properties in the portfolio, making sure that they are on track for a strong year. This is the time of year where obviously all the campgrounds are getting online. The seasonal campgrounds are getting online for the year. So setting up our marketing plans, making sure those are in place for optimal revenue this year. We've been performing well. We actually had 3 out of 5 of them exceeded the budget. The 2 that didn't quite were very, very close within their budget. So we've got strong performance in what's already in the portfolio. The big update I want to talk to, of course, as it relates to the new acquisitions. We have not closed anything year to date. And frankly, I'm actually okay with that, given the economy that we're in right now, given the market conditions that we're seeing. The interest rates have been up for the past about 8 months straight, that they have not gone down. That's certainly affected our underwriting. We have really bolstered our acquisition criteria as we head into a softening, an economy that continues to soften. So we're being very mindful of what we look at putting into the portfolio, into the fund, as it relates to new acquisitions. So we have definitely made more stringent acquisition criteria, which means that more properties that we look at just don't pass the test for us. And we would rather not close anything in the short term than close something that could be a ticking time bomb at a future date, just given where things are right now. So we have had 3 opportunities this year that we did pass on after some amount of underwriting. Some of this just had to do with expectations that sellers have. We were in a very, very hot market 2 years ago that went really all the way up until last summer. And a lot of the sellers, unfortunately, who missed the curve selling last year are still expecting some of the same outcomes they would have seen before. We are being much more conservative in our underwriting now, looking at much higher cap rates just to account for the interest rates where they are, and of course, just the economic conditions as a whole. We do still feel bullish on the industry. All signs point to the outdoor hospitality and the camping industry being strong for the rest of the year. I'll share some data on that here shortly. But in the short term, we want to make sure that the properties we are buying are solvents, that they are knockouts. We do have some opportunities that are coming, which we'll be sharing in the near future. Of course, the big update we had in 2022 was that we launched the Outdoor Hospitality Sun Fund, which many of you in the room are part of the fund. Of course, for those of you who aren't, it is a $25 million fund that is raising through November of 2023. We already made our first distribution this quarter. We distributed 3% just for the first quarter of the year. So we did exceed our performance metrics by enough that Rick, our CFO, told us that we were okay to give that 3% and that we'd still be on track to keep our distributions up for the rest of the year. So great news on that front there. It's definitely been the property that's in there, of course, Beyonder Resort, Cajun Moon, has been a strong performer thus far, has exceeded our expectations. It's off to a great start. So that's good news there. And then, of course, let's move forward here. Let's see here. Just a little update on all the business within Beyonder Holdings for the first quarter. Year to date, we've raised 1.1 million into the fund that's going to be moving into the next opportunity we bring forward once we find one that is the correct fit. Typically what we find is once we have an opportunity lined up, of course, those funds come in a little bit easier, but this is still an open-ended fund. It is still allowing investments now, even while we don't have an opportunity right at this present moment. Some of the things we did, I mentioned, of course, bolstering those acquisition criteria, was we really took a hard look at our cap rates that we were underwriting at. And of course, the capitalized approach being when we factor the net income in with the cap rate to determine what we believe a property is worth. Our industry as a whole was running at about the 7 to 8% cap range just about a year ago. And what we have, of course, seen when interest rates go up, the demand changes, which does affect those rates. A higher cap rate means a lower price. A lower cap rate means a higher price. We have bumped all of the cap rates up in our underwriting, and this is what screens a lot of the properties out and makes them where we can't get necessarily offers past the seller's expectations. But we've never gone below an 8% cap on any of the properties we've purchased, and right now we're really not looking at anything below about a 9 or a 10 in general. In fact, a couple of the properties we're underwriting right now, we're underwriting an 11 to 12% cap. So a little more strict than some of our competitors in the business, but for us to make sure that we're getting knockout opportunities, that's really where we have to be to help mitigate risk as well. One of the big other criteria we did, this was following the Silicon Valley Bank issues that came up a couple months ago. We raised our DSCR thresholds to 1.8. We just want to make sure that when we were taking bank loans, that we're putting ourselves in a situation where we were very comfortable in our ability to make debt payments. And of course, we launched a new tool that's improved our underwriting. It's expedited the process, ensured we have better accuracy, also a better picture of what these opportunities will look like in the future, given some sensitivity to cap rates and also interest rates as well too. So that's a tool we've been implementing, which has helped us. Of course, as we've always said, we step over a lot more opportunities than we actually pick up and look at. So that journey, unfortunately, has gotten a little more difficult, just as we are managing that curve of seller expectations coming around. And of course, our expectations as buyers is where we're going to be. But like I mentioned, we're going to make sure that we're buying the right properties and putting those in. One thing we're doing to improve that process as well and make sure that we maintain a high standard and high accuracy is we just created a new role we're working on filling. We are currently interviewing for an analyst to join our team. So, to take our process, many of you have met Bradley Claudianos, who's our acquisitions specialist on the team. He's been a jack of all trades as it relates to finding deals that are off market and then also seeing them through to closing. But we're going to help alleviate some of his load by bringing in an analyst, somebody who's going to help him underwrite and get things moving forward. So we'll have more moving forward with that. As it relates to the management side, like I mentioned, we're putting a lot of emphasis on our marketing and really just making sure that we're driving traffic to the campgrounds this year, getting our occupancy and our rates in place where they need to be. We've introduced a new Beyonder mascot. Many of you who are on the campground distribution list have gotten it already. If you haven't, we'll make sure it's in the next update. But we have a new mascot. He's a raccoon. He's the Beyonder raccoon named Boomer. We actually just did a naming contest that came back. So what we have found from other competitors in our space is mascots help. They drive a lot of families in, who is our target demographic. And they really make a big difference. So that's going to be something that's rolling out. It's going to help with some of the branding. We did launch a new website that's currently undergoing an extensive SEO improvement. And we've run a very heavy geofence and targeted marketing campaign just to help drive more campers into the campgrounds this year. We are seeing some alleviation on fuel prices this year. So we do expect that people will be venturing a little bit further this year than they were last year when fuel prices were higher. So we are going to be targeting markets that are outside of our primary markets at each of the campgrounds. Talk a little bit about what we're expecting going forward for the rest of the year. This is going to be an update on the SWOT analysis that we shared in Q1. So again, the strengths, the weaknesses, the opportunities, and the threats of the market. And just a reiteration of some of those that we just need to consider. Obviously, we had a very, very high curve in new campers who came in post 2020. Taking us up over 11 million camping households in the country, 6.2 of those being RV campers. That was through into 2022. Many of those they didn't even own RVs at the time. Frankly, they couldn't buy RVs at the time. Obviously, most of the RV industry was backlogged on RV shipments well into 2022, and they were just catching up in the backlogs from 2021. But one of the big things that came up, of course, this had to relate to the economy this year, had to do with the number of people who said they would replace other forms of travel with RV camping if the economy continued to weaken. So that was a strong statistic. Number of people who said they would actually, maybe postpone the international trip and they would go camping instead. So great data to help us out. 34% of people, this was of course before the fuel prices started dropping, said they were more likely to RV with fuel prices increasing, obviously, as they were last year. Some of the weaknesses that we were seeing in surveys from last year, of course, had to do with RV campgrounds being full. Occupancy has been at a high for the past couple of years in most of these campgrounds. 2021 particularly was a very high year. 2022 was still typically stronger than 19 and 20 in most of these campgrounds. Some of the things that we have had to look at, though, of course, is that our cost for building new sites or new campgrounds has gone up substantially. The cost to expand and add new sites has gone up. We have factored that into all of our underwriting going forward. And this also was in place on our underwrites we did last year on some of our newer properties. And part of this just has to come with labor shortages. Participation in the labor markets has been down. So those who are in the market, of course, are commanding top dollar. Material costs have come down in some categories, but in some they're still high. Electrical supplies are still hard to come by. They become very expensive, of course, as we consider that as we go into new projects going forward. Of course, the cost to build has always taken quite a while, or the timelines to build have always been long, but they've been excruciating long in the past couple of years, which is why we have not yet delved into the new construction space yet. It is a long time horizon, although it is something we intend to get into in the near future. We are going to continue buying cash flowing properties that are cash flowing from the start. And then, of course, one of the big weaknesses in the industry that I think this is something that's a big opportunity for us has been the Wi-Fi. It's often understated in our industry that the importance of Wi-Fi. We call it the fourth hookup to go along with the water, the sewer, and the electric. Most campground owners have poor to no Wi-Fi. They have poor internet connections, and with a world where we have a lot more remote workers and homeschoolers, of course, that Wi-Fi is critical. For us, that is something that we've baked into every one of our business plans, is a plan to have an incredible Wi-Fi system. Almost all of our campgrounds, all but one right now, have brand new Wi-Fi distribution systems in that are state of the art. They're managed so that everybody gets a great, strong, fast Wi-Fi connection. We pay for good backbone behind that. So that's an opportunity, I think, that really sets us apart from a lot of the other operators out there, is our focus on what is important. One weakness, this is a new piece of data that is affecting the RV industry, not necessarily the RV camping, but this is from the RVIA, is that shipments have been down Q1 2023 compared to Q1 2022. Frankly, I'm not too concerned about this, and I'll, as I mentioned before, a lot of those shipments in 2022 were a backlog from 2021. So the industry experienced a number of orders. You can see on that top graph, close to 600,000, which was about 20% higher than it had ever been in the past. And it was just frankly not tooled or equipped to ship those units out. So they tooled up and they got their butts in gear, and they spent the first part of 2022 shipping out a ton of units. So a lot of those numbers are actually 2020 numbers, and I'm sorry, 2021 numbers that were reflected in 2022. So when we see a decline, even though it is a substantial 50%, I think it's just because we're comparing it to the backlog of the year prior. I gave a monthly shipment report down below just to give a little more context to that. Q1 is typically the slowest month of the year for RV shipments. Q2, Q3 are the highest of the year. So we'll keep an eye on this, because the RV industry is a leading indicator for our industry of just how many new people we have coming in. So that's just something that we're going to keep our eye on going forward this year. One of the threats before that I'm going to give an update on that I think is good news for us, of course, has to do with fuel prices. This big statistic we had last year was that, of course, 32% of people said they wouldn't change their plans and this was in May of last year, and fuel prices were near their highest, as you can see on that chart. Said they wouldn't change their plans over RV camping, but that would have implied that 68% of people would have. And, as you've all probably heard me mention in one or more of these webinars before, what we were expecting to have a much bigger impact from the fuel prices. We didn't actually have so much an impact on our occupancy, our revenue. What we ended up with more so was just a change in where the campers came from. So rather than have the people who are traveling from 2 state lines away, more of them were traveling within a 150-mile radius of their home. So again, that just gives more credence to our acquisition criteria, where we buy within 150 miles of major MSAs, preferably more than one. But what we did find at the time of this data here, and I should say this October update to it, was that 25% of the people said they wouldn't change their plans by October from May. At that time, you could see the national average fuel price was somewhere right around $3.80 to $3.90 a gallon. And now our national average, as you can see, has tapered off from there, and it's trending below those lines at the time where people said they would go to 25%. So I think that's a good sign that we're going to have more people who are willing to venture out a little bit further this year. The sting is maybe lessened. It's because it's been almost a year since that first data came out, and at a time I should add when the gas price was over $5 a gallon. So we're definitely in a better position in that area now than we were before. Looking into this year, this was data that was from the end of 2022, but it's still something we need to consider. People said that they would use, 35% of people said they would use an RV over other forms of transportation, not communication. Apologize about the syntax error in there. Spell check won't catch those, unfortunately. 20% said they wouldn't have changed their plans that had RV trips booked. 29% said they would still camp but would stay closer to home. And like I said, that number really was supported in what we saw. And of course, looking ahead even further into the future, this is newer survey data here. If people said, okay, if this keeps going, if this softening in the economy we're feeling right now, this inflation continues into 2024, what do those numbers look like? They do taper down a little bit. However, many people said they would, of course, stay closer to home, and they might even just change their trip plans altogether to visit local attractions. So that is another focus that we have in our campgrounds, is making them local attractions. Many times we're in smaller communities outside of big cities that are otherwise underserved by attractions. So we have the ability to go in and really create an amenity attraction in our campgrounds. At Beyond Our Getaway Rising Sun in Rising Sun, Indiana, that's just outside of Cincinnati. Again, small community within about 20 minutes of Cincinnati, but there's not a lot to do in the area otherwise, other than visit our campground or go to the casino. And we're adding a music stage right now to have live music on site. We're making sure, of course, all of our campgrounds have swimming pools and charge day passes. So we do have opportunities to bring in other ancillary forms of revenue, even if people aren't doing as much camping, which we don't necessarily expect is going to happen, but if this survey proves true, we want to make sure that we're cornering every market we can going forward. So some of the things we always need to consider to set us apart, there's some of those competitive advantages have to do with the availability of a site. The restrooms are one of the top priorities in every one of our campgrounds. Good Sam, which we're a member of in all of our campgrounds, scores restrooms, and I'm proud to say we're at least a 9, if not a 10, in all of our campgrounds, 9 out of 10, or 10 out of 10 in all of our campgrounds for the restroom cleanliness and condition. The site availability, of course, being important, obviously, because that was a big crunch people felt in 2021 and 2022, is that they couldn't find an RV site, and a lot of them were frustrated, and making sure that we have sites available and that they are easy to find as a big focus with online reservations. Most people are going to make their decision based upon former guest reviews. This has been a focus of ours since the beginning. In fact, our managers are bonused upon guest reviews. That's one of the metrics they're bonused on. So that is certainly something that we make very important to them. And then, of course, self-service access to make and modify reservations is important. Our online reservation platform does that. It provides a guest portal. Guests are able to go in and manage their accounts, and of course, make their online bookings. Amenities have been important. This data here, it comes from a KOA survey about the importance of walking paths, rentals, pools. We conducted our own survey recently. I don't have the data to put in the slides yet, but we found, of course, this is something we've believed since the beginning, though, but most of our campers, of the 7,000 that are in the Beyonder database, said that water was one of the most important amenities for them. So having a swimming pool, for example, is critical for us. At Beyonder Getaway Sleepy Hollow, we had a swimming pool issue, and we found out the importance of that when that pool went down last year during the season. And we had an exodus of some of our seasonal campers. And fortunately, we've got them rebooking this year as our new pool is nearing completion and should be open by Memorial Weekend. So upcoming events, I've got a couple more updates, and then I want to turn the floor over to your questions. I want to leave more than half the time available for that, but I do want to talk about some things we have coming up. We have an investor dinner. This is actually an investor luncheon. We just changed this earlier today. I'd already made the slide deck at this time, but we do have a number of investors in the Northeast, even though we're based in the mountain region. So we have 2 investor luncheons that are in the Northeast, one in Connecticut on Sunday, June 11th. This is open to all current Beyonder investors. And then it's going to be an opportunity to learn a little bit more about us and any opportunities that we have in play at the time. We do expect, given some of the current stuff we are looking at, that we'll have 1, if not 2, maybe even 3 opportunities to review at that time. And then we're going to have a second luncheon the following day. It's going to be in New York City. And of course, that's going to be open to current investors and prospective investors. So friends, family members you might have who are interested in joining, this would be open to them as well too, to join us for a lunch that day as well. So when we send the recording of this webinar out tomorrow, we will send out an interest form, a save the date, more or less, for both of these luncheons. For anyone who's interested in joining us, we'd love to have you if you are in the area, or if you want to make the trip and come out and meet with us. We look forward to the opportunity to meet with you. We are planning another investor summit this year. Location is still to be determined on this one here. This is going to be targeting Q3, likely mid to late Q3 when this happens. But this is going to be a bigger investor event. We want to get as many of our current investors and new prospective investors out to have some really just a great chance to meet with one another, to have some fun at in a fun destination city. We're going to have some educational sessions, talk about some opportunities we have at the time. Have some networking opportunities. So we'll have more coming on this. Likely, by the end of Q2, we should have a location picked and announcement. So just something we want to keep our eye out for. We want more opportunities, of course, to meet with you, meet with friends of yours, of course, anybody who might be a good candidate to invest with us. So that is about all I had. Before I open up to questions real quick, I want to check with Don, Ramesh, Rick. Was there anything that you guys wanted to share that I might have glossed over or that you felt was important to mention?
And I would, thanks, Adam. I would definitely want to add this, right? The reason I know we all feel the economy, the high inflation, high interest rates and everything, and we are all very prepared in underwriting our deals. But more importantly, keep in mind, unemployment rate is very low, okay? And that is one of the reasons we haven't hit a recession yet. And that is what people are still spending, and that is why the inflation is still, on the highs. So keeping that in mind, I just checked. The last time we had 3.4 was 54 years ago, 1969, month of May. Okay, so after 54 years, we are having the lowest unemployment rate in the history right now. So that is what is still keeping people spending. And during COVID time, people were all in-house and they were only spending on supplies, retail, clothes, and everything else, right? Like cars, RVs and everything else. But in the last 2 years, 2022 and 2023, people are moving out beaches, outdoor hospitality, hotels, vacation spots, everything, restaurants, everything is overcrowded and overbooked. And that is one of the reasons we are very optimistic about 2023 and probably 2024, even though things might be a little bit soft. I just want to add that.
Yeah, great point, Ramesh. Don, I saw you come off mute. Did you have something to share as well?
No, nothing really offhand. Other than just, some people might be asking, is now a good time to invest? Considering all the things that you mentioned before, the economy and all that stuff. But it's one of those things that depends on your goals and your what you look to do with your investments. I mean, obviously, as was mentioned before, from this fund we've already distributed out 3% just in Q1. That's sometimes more than what some other opportunities put out in a whole entire year. So it's definitely something that if you're looking for substantial cash flow opportunities, we are, as Adam mentioned, with our criteria, we look for these amazing opportunities that are sure to deliver each and every quarter. It's not miss out on a distribution.
Yeah, and I'll add to that. I mean, our investors, especially any of you who've been with us for more than a year at this point, know that we're hyper conservative in the way we handle our business. To the point we actually upset a couple investors last year when we distributed smaller amounts just because we were monitoring the economic situation at the time. But as we look forward, and Rick and I review these reports regularly. We feel comfortable with where we're headed this year and, seeing this trend move forward. I understand that some of you might be invested in other opportunities in other real estate assets that might not be performing the same way. I know Don's got a few investors who've been in the multifamily space who are feeling the pinch right now with capital calls and the like. We don't see the need for us to need to do that in the short term. At least for now, we're seeing a good strong outlook going forward. And one thing I'm going to hit on, just Don, you mentioned, of course, is it a good time to invest? I don't ever want to I don't ever want to be the reason anybody chooses to make a decision because I tell them yes. But what I will say, that really smacked me a couple of weeks ago is I was reading the Goldman Sachs dollar forecast report. And I don't know if anybody else read that data, but that was pretty stunning. They showed that the dollar had decreased in value 8% this year already. And they believed that the dollar was still 15% overvalued at that time of that report. So I don't know about the rest of you, but my intent is not to leave my money in fiat currency at this point. It's to get into assets that will, at the very minimum, maintain, if not improve in value over in the next few years. So with that, I'd like to open the floor up to any questions. I see we've got one or two in the chat thus far. So we'll dive into those first, and then of course I'll open it up for open mic for anyone who wants to come off mute. So the first question was, are there slides being showed? I apologize that we missed that. Yes, there are slides being showed. If you're on a phone and not able to see those, you will be able to watch the recording tomorrow and be able to see any of the slides and information that you might have missed. Let's see here. The next question we had was, what is the difference in distribution between the goal you had and the actual distribution 3%? So that's a great question. So that is in reference to the Outdoor Hospitality Sun Fund, which was where we gave a 3% distribution this quarter. And so the actual on that is just for one quarter, 3%. We had a goal with the property. We actually expected that that property was going to have a slower start. We projected we were going to be, I believe, actually only about 5% for the year, if I recall, for Cajun Moon, which is the only property in that fund at the moment. The fund is targeting, once it's stabilized, to be at 12% is what we're targeting. So if we were targeting 12%, this would be on track for that goal, which means that from what we projected on just Cajun Moon, the property itself, that would put us ahead by quite a bit, because of course, if we were to, for example, distribute 3% each quarter this year, that would be a cumulative 12% across the year. Looks like we have another question. Are there any opportunities for non-accredited investors coming soon? Josh, I hear you on that one. That's a question we get every day. Don beats me over the head with a stick about that one all the time, that we need to get more non-accredited opportunities. Unfortunately, when we launched the fund, we made that a big focus going into the quarter and wrapping up last year. And, unfortunately, to make that fund work the way we wanted to be able to market it, we're really hamstrung by the SEC and what we're allowed to do within that Regulation D exemption. So for us to be able to market it and, as they call, solicit the opportunity, we weren't able to offer this to non-accredited investors. Don has been diligently working on a couple of paths to get non-accredited investors into that opportunity. There are a couple of legal routes to do it. And that's going to be something that, once we find a good vendor for this, we're going to move forward. Unfortunately, we had a guy that we were ready to move with, and then he decided to shut his doors on his business. So I'll let Don chat about that in a second here, just and what that entails. But it's something we're still looking for another vendor and opportunity on. But nonetheless, we do have a few opportunities we're looking at that, if we determine maybe they aren't the right fit for what we want to put in the Outdoor Hospitality Sun Fund, that we could potentially make into a 506B opportunity and open for accredited and non-accredited investors alike. Don, did you want to chat a little bit about that Rig CF?
Sure. Yeah. So as Adam was mentioning, we're exploring the possibilities of a Reg CF, which basically, the way I guess interpret this, is more like a backdoor to get into a 506C for non-accredited investors. As Adam mentioned, we were kind of comparing two different platforms that have that possibility. One that we were kind of more heavily leaning towards, unfortunately decided to, like I said, close the doors down. We have another one we are looking into. In fact, we just in the last couple of days set up like a test page. Basically, it's not an official thing to accept investments or anything. It's kind of just more of something to get open to see what I guess what interest there is out there. If there's enough interest in that to do that, then we may potentially do that. But as of right now, there's nothing officially that's up and ready yet.
Okay.
So obviously, we will keep you informed of when that does happen, and we may potentially send out an email with the link for this test page at some point soon.
Yeah, and Don used the term backdoor, but I'll just reiterate. Of course, it's a very legal.
Yeah, it's legal.
Investing. So I just want to clarify that it is a very unique vehicle. It does require someone with a securities license to administer it, which is why we need a third party to do it. They can't be related to us. It can't be somebody on the team who does it. So we are working toward getting that put together. But believe me, Josh, I hear you on that. We do want to get some more non-accredited investor opportunities out there. Of course, we want to help you become an accredited investor, so that's a non-issue. But we're working on getting you there. The next question, I love this question. It says, as there is a push for everything to go electric, how is the RV vehicle industry planning for it? Any insights? How does the Campground need to prepare for electrical RVs in the future? So this is something near and dear to us. I'm really glad you brought this up. So we expect, even though the electric vehicle rollout, I think, is going to be a lot slower than some people are expecting, I think it's going to be here a lot sooner. And we'd be fools to overlook it and discount it. So this is something we've been preparing for the past 2 years. And actually, we've been implementing in each of our business plans going forward, which is to meter every single site. So I'll give a little bit of background and history. Most campgrounds run by mom and pops, for example, they typically have very small staff. And traditionally, if they wanted to meter electricity on a site, it means they had to put a meter socket with a round meter, just like you have in your house, on the site. And then they'd have to have somebody go read the meter. So it wasn't really feasible in, say, a 200 site campground to go read every single meter when everybody checked out. So instead, what they would really only want to do is read them once a month, meaning that if somebody stayed for a night or a weekend or a week, they weren't going to be able to get a read on how much electricity that person used. So they typically just baked a flat dollar amount into the rate and just said, well, that should probably cover whatever electricity that person uses. And inevitably that person will run their air conditioner a lot and they'll use a fair amount of electricity, but that's just the cost of doing business. Well, as we look at electric vehicles going forward, we've got the big three have all rolled out electric pickup trucks at this point here. Although they can't tow for a very long range, there are electric RVs coming out now. And, we are going to see people pulling into our campgrounds, I think in the next couple of years, with an electric pickup truck that's got a depleted battery and a big camper behind them that has 3 air conditioners on top and is going to use a ton of power. They're going to plug into our site and they're going to use more power in one night than the average camper uses in a week. And if we don't meter that electricity, we're going to be in a world of hurt. And I think the industry as a whole, anybody who has not embraced a wireless metering technology, which is what we're putting in, is going to be in a painful spot. This is a transition that the industry is going through right now. There are several campground owners besides us who are doing this with great success, and they aren't seeing any blowback from this because it's just going to become a normal expectation that when you check in, your meter is read electronically. We've got a system that will do this wirelessly. And then when you check out, your meter is read again and you're billed for the electricity between those 2 time marks. It ends up being a very small amount for the average user, but if somebody's charging their electric pickup truck, it's going to be a little more, and rightfully so. So all of our business plans going forward involve incorporating wireless meters at the sites that are tied to our reservation system. It has another benefit too, which means that when the person's checked out of the site, the pedestal turns off. And we can't have somebody else just pull up and drain electricity off without our knowing it. It actually disconnects the power from it. So that's a big benefit. That's something that I love to talk about. So I do appreciate the question. All right, next question I've got in the chat says, how many more properties, campgrounds, are you planning to add? And Alan, to answer your question, in the long term, we have a goal of 100 campgrounds. That's going to take us a little bit of time to get there. But in the short term, we had set a goal for this year of adding 10 campgrounds to the portfolio. Now, as I mentioned before, we had 3 opportunities we were working on that we did pass over, that we got a fair amount of effort and investment of time and money into before we decided to move on. I still don't think that impacts our plan though at this point, because we actually do have a couple of capital partners who have stepped forward who are looking to put a fair amount in. So we are working to get a few opportunities lined up parallel right now, provided that we get the right opportunities going forward. We also have a new partnership that I'm not going to be able to announce until hopefully the next Q&A that's going to really help improve our deal flow. That's all I can say about it at this time, but we've got a really awesome partnership that we're starting into. So, we are still planning on adding many more opportunities. So to go back to the question before, of course, about, the non-accredited investors, I'm certain we're going to have non-accredited investor opportunities and accredited opportunities coming forward here in the very near future as we just get into the right deals. The next question was, any plans to add solar plants to generate energy? Good question. That is something we have briefly looked into. The feasibility becomes very difficult with solar. A lot of cost to install, and on commercial installs, there aren't as many benefits as there are to the residential space. We have not found a way to make this feasible yet. I mean, believe me, this is something I looked at when we first got into the space, that we could build covered RV sites that would have more or less like a big carport that an RV could park under, that would have solar panels on it. It would reduce the amount of air conditioning that need to be used, generate electricity. As we looked into it, spoke with a few vendors, we haven't yet found a solution that would make sense with that. I'm not ruling it out. I'm not saying it's not something we would ever do. It's just not something we've found a feasibility on yet. So we might need some new incentives to come from the government to help fund that. Right now, those, like I said, those that are for commercial are very, very low. They're also hyper local in some cases as well too. I've made it through the questions in the chat. I'd like to open it up for anybody who'd like to come off mute. Feel free to jump out there and ask a question if you got it. And if we're waiting for someone to come off, we do have another question that just came up in the chat. It said, can you describe your marketing plan to fill up the campground? Good question. So as I mentioned, of course, we put a heavy emphasis on marketing this year. Digital marketing is the main form of marketing. There are very limited print opportunities anymore, although we do still pursue some of those, like we get in the Good Sam book that goes out. For those who still read it, we mostly use it as a method of lead generation, but there's some people maybe out there who might still be traveling with that big phone book of campgrounds in the country. But the digital is where we really put our emphasis on our marketing. As I mentioned, we're doing an SEO overhaul on our website right now. Targeted marketing, as far as the Google AdWords go, we're actually geofencing not just our local markets that we're in, we're geofencing the neighboring markets as well too. So I'll give you a great example. Someone in Cedar Rapids, Iowa right now is searching for campgrounds. They're going to find Lazy Acres. They're going to find Sleepy Hollow because we are geofencing those areas. We're looking for people that are in those neighboring markets. We're going to be actually expanding that out even further. So a great example is going to be for Stair Creek. We're working on implementing, in fact, we just talked about it this week, getting that geofencing into Kansas City and St. Louis and Springfield, which is outside of the 150-mile radius. But like I said, with fuel prices being down, we are expecting a little wider travel from people this year. There'll probably be some pent up energy to get out of their local markets anyway and branch out a little bit further. Social media marketing is still a very big thing. We have a mixed approach on that between paid marketing pieces that we do and then also passive marketing and engagement. We've got a contractor who set up a great marketing system for our campground managers to oversee the social media marketing, to get local things that they're doing, events, activities published on the pages, but also get some paid promotion out for opportunities that we're running right now at those individual campgrounds. So that's the crux of most of our marketing that we're doing right now. Of course, also some email marketing that we do in conjunction with our reservation management system, just to get updates out there, and of course some discounts every now and again to help fill in, especially our weekdays. Weekdays tend to be our lower occupancy in our campgrounds. Obviously, weekends we typically don't have a problem filling up, but the big opportunity to maximize these comes with filling in those days in the week. So we're running some promotions right now to get people to extend their trips on the front end or the back end, stay a Thursday night, stay a Sunday night, push it a little bit longer to help bring that revenue up. Let's see here. The next question's coming in, and I promised I'd open it up for open mic, but we got a few more in the chat. So just if you wanted to jump in and chat, just give me 1 second to get through these next couple, and we'll open it up here. Next one says, what percentage of revenue are we expecting from additions like swimming pools, etc.? That is a question I wish I could quantify the answer to. I can't. I call things like swimming pools, playgrounds, fire pits, indirect revenue generators. We know that they help us justify higher rates, that they're going to bring more people in, that people will seek those things out. I can't peg an exact dollar amount to it. And this might be something that we need to really find a better way to analyze our data going forward in the future on. But I can tell you just from anecdotal experience, not having a swimming pool will absolutely hurt your ability to generate revenue. Like I said, that's something we learned at Sleepy Hollow in particular when our pool went down last year, is it definitely impacted our ability to generate revenue. So that's why we made it a priority, and we found a way to get a new pool put in this year. Unfortunately, we made efforts to repair that one last year, and it didn't stick. So we're now doing a full replacement that is nearing completion, should be done in the next within the next week. It's actually getting its finishing touches right now. So as far as those indirect generators go, I can't tell you exactly what they are. When we do a business plan, we try to take a very balanced approach. We don't just throw the kitchen sink at the campground and expect that an infinite amount of money is going to improve the rates. We look for what that market demands. So there is a fair amount of market research that goes into what other campgrounds in the area have. And then of course, in finding what additional demands there might be that would set us apart from those other campgrounds without overspending, without building it above its current market. So apologize, I can't give a better answer than that. Like I said, it's not something I can necessarily quantify. Last question I've got in the chat, right, at least for the moment, is if you showed financial updates, I missed it. Can you give some updates on the income made, expenses incurred, savings in the bank, etc.? That's a good question. I don't have those queued up for this presentation, but they are in the investor portal. So anybody who has not had a chance to see the financial reports yet, if you go to investors.beyondercamp.com, which is the investor portal, you log in through your login. If you go to your investments tab, it'll show the different opportunities you're invested in with us. When you click on them, there will be a folder at the bottom that's called financial reports. And that's where you'll find the P&Ls, the balance sheets, everything you might want to know. When you're in that property screen is also where you'll see the updates. Don does a great job of compiling and circulating our property updates every month. So you know what the new happenings are, if we hired a new manager, if we added a new amenity, if something broke, we like to keep everyone well informed as to what's going on in the property. So I don't have those numbers to share today, but if you do need help getting into those numbers, just reach out to Ramesh or Don. They can help you get in. And of course, if you have trouble accessing the portal, reach out to Rameshdan or myself, and then we can help make sure that you can get in through your login. All right, now I've got my head above water in the chat questions. Anybody who's got a question they wanted to ask, voice to voice, please feel free to come off mute.
Hi, this is Narayan.
Hi, Narayan.
Hi, thanks for the update, and it was very good to see that I not only got a good depreciation, but also got some returns distribution. Thank you for that. In terms of you missing the 3 properties because of the high interest rates, I was wondering, now there is a lot of people are going, the investors or the people who are investing in commercial real estate or acquiring properties, they are using interest only and short-term kind of things, not going for a 10-year, 25-year amortization or something. They're going just interest only loan to bridge until the interest rate drops and then carrying it over. Have you looked into those kind of different options with the lenders?
Narayan, that's a good question. We are, again, this is something we're very conservative about. I don't want to take on any debt that's going to be a gamble. So I don't like anything that's too short term to where I don't know what the interest rates might be in a couple of years. You know, if we took a bridge option that was 2 or 3 years out and the interest rates stayed high or got higher, we'd be in a forced situation to take a much higher interest rate at that time. And although maybe the business will be improved at that point, it will be able to absorb that extra interest. It's just not something we feel comfortable doing. We prefer fixed rate debt, and we prefer to make sure that our terms are a minimum of our hold period. We prefer longer. So I think to date, our shortest term debt we have is 5 years. And that was, of course, on a planned 5-year hold. So, you know, but we prefer 7 to 10 years. So, and we have been negotiating interest only. All of our debt, you know, that we've required in the past year has been interest only for at least a year, if not 2 years before principal payments begin. But we do go in with a fixed rate and an expectation of what that's going to be going forward. We also closed 2 properties last year with seller financing. So we are open to creative opportunities. We actually have an opportunity we're underwriting right now that has an assumable loan on it that has a rate that would be good. So believe we are looking at every good opportunity out there. The debt is typically not the thing that's keeping these current acquisitions we've had from going through, though. You know, we've been underwriting at 6 to 7% interest for about the past 6 months. That's stayed fairly consistent. That has we haven't seen anything above 7% in some time. But you know, the bigger thing is the seller expectations. A lot of the sellers think that they can still sell on 2021, 2022 cap rates, you know, looking for, 7% to 8% cap rate. And that's just frankly where we end up missing it with a lot of people, or some are looking for even more compressed than that, which we can't offer. So we are looking to get deals done, but we are absolutely looking to get it done the right way. So, but no, I appreciate the feedback on that, Narayan. All right, next question we had in the chat come up, and then I'll open it again for anybody who wants to chat, is what percentage of revenue loss are we expecting due to slowing down of the economy? Only looking for ballpark numbers and not exact numbers. Well, to answer that, we haven't had an expectation that revenue numbers are going to go down right now. With the economy where it is. In fact, you know, this is an industry that has seemed to do a little better when other parts of the economy aren't doing as well. A great example being that for the past about 6 months, airfare has been more expensive than it has been in recent years. And, you know, some of that survey data I shared earlier suggested that people would actually maybe replace those long, you know, those trips they would take, you know, traditionally by plane, maybe international or even long domestic, and replace it with RV camping. So I haven't seen any evidence to say that we will have an expected loss of revenue. Our projections going forward don't seem to indicate it. You know, if we see a sign that is coming, you know, we'll certainly find a way to adapt to that if that comes up.
Adam, I just want to add, we are actively, putting out LOIs out there based on our expectations and meeting the requirements. So if any of the investors want to up their investments from their current investment amount, like, as we said before, we have the 3 different classes, like a Pref 8, Pref 9%, Pref 10% in the Sun Fund. So they can definitely, from 100,000, they can go up to 250 and reach the next class category when they, by right now, so that they can be ready when the next investment comes in, this opportunity comes in.
And Ramesh, you just reminded me of something I'll add in there, because I've received the question a couple of times this week. Those who joined the fund or went to the fund webinars do know that we mentioned we would be reanalyzing the share price on a quarterly basis. Given the performance we've had in the first quarter, we are looking at making an increase in that share price here soon. We have not finalized it yet, but I would expect that we're probably going to see somewhere between a 1.5% and a 3% increase in that share price coming in the next couple of weeks. So we will announce it before it happens. We'll give anyone who is already in a chance to up their investments prior to. But that is something we're going to be analyzing here and rolling out here very soon, just given the performance that we've seen thus far and the positive outlook. All right.
Adam, this is Shirish. A quick question about the survey. Was wondering what the source was, if it's a scientific survey. And I'm also curious, if 30% said their plans are not changing, I was curious who the other 70 are. If they are never campers, then it doesn't make sense to include them in a survey, right?
Right. So the survey data that I cited in that was from KOA, so Campgrounds of America, and they hired a group called Cairn Research, who does outdoor surveys. So these are of users in the space who are they're surveying people who are users in our space. Now I can't speak to the integrity of that survey and know exactly who was surveyed, but it's my understanding this is an industry staple report that gets used, the 2020 or the yearly North American Camping Report. So to answer your question about the other 70% who said their plans would, who didn't say their plans wouldn't change, that's a great question. I don't have the data on that. I only have limited data. So I would say that you're now actually prompting me to probably go back and dig a little deeper into that North American Camping Report. But Campgrounds of America, KOA, they might be a competitor of ours in the management space, but they are a group that we admire, and they do publish that North American Camping Report on their website. It's free for download for anybody who wants to go grab it. In fact, the 2023 report should be coming out here soon. They're still, the last I checked, they still have the 2022 report up there. But that's where that data comes from, and you might be able to dive into that a little bit deeper.
I mean, if there's a big demand for these campgrounds and there's a supply issue, then irrespective of the survey, it's basically good news, right?
Yes, that's correct.
All right. Okay. Thanks.
And regarding the supply, this is I've shared this statistic on many of our webinars. So, many of you probably heard me say this before, but I had a 2019 number, and I can't cite my source on this. I think this might be a hearsay third party number, but that in 2019 there were 2.5 RV recreational vehicles for every RV site in the country. And given those, I shared those those shipment numbers from the RV Industry Association. Over the past few years, they've hit record numbers. 600,000 units alone in 2022 were shipped out. And I can tell you that not that many new sites have been developed. Development has been on an uptick in the past couple of years, but not that many new sites have been developed. So that ratio has probably slid to even more RVs than there are RV sites. So if everybody wanted to go camping the same weekend, they would not be able to, and even more would be barred from doing it. So that's a good metric for our space, but I would love to get an updated statistic on that, on the number of RVs that are on the road and the number of RV sites in the country. I'll make that a dedication by the next Q&A to have that number updated. Okay, we probably got time for one more question before we wrap up. I want to be respectful of everyone's time. So if there's any last question that anyone wants to get either on the mic or in the chat, please feel free to do so.
So if there's no other questions, I'll take that last one. So
Please.
I'm excited about the annual meeting that you talked about in the third quarter with all the investors. And if, I don't know, you're not decided on the venue, but I was thinking if you could select one of the campgrounds as a venue and bring, so we can also see the campgrounds, make it a double purpose thing, that'll be great.
Yeah, I appreciate the feedback. I've given some consideration to the campgrounds. We just have to consider travel and how everybody gets there. I want to make sure it's something that's accessible. I would love to use one of our venues for it. So like I said, it's something we're actively researching right now. And we'll also take a look at what we acquire in the next couple of months, because we may have a new property that's not in our portfolio yet that could be a great fit. We want to make sure, obviously, that if we are going to bring a bunch of people out to one of our campgrounds, we're not doing it at a peak holiday weekend or a time that we're going to take a substantial amount of revenue away from the campground. So that's just a consideration we'll have to make as well as we look into this. But we will have an announcement, as I mentioned, by the end of Q2, where this is going to be something we look forward to doing. So with that, we are 2 minutes to the top of the hour. I want to just take a minute to close up. Thank everybody for coming out today. Really appreciate you taking time out of your afternoon, your evening. Really appreciate your trust in us as your partners, of course, in this outdoor hospitality investment space. I want you to know, of course, that this is, we take that seriously. It's a high honor for us to be able to be your partners in this. If you missed anything today, if you showed up late, the recording will be released tomorrow by email. If somebody you know needs to see this, needs to know about this, please feel free to forward that email to them. Share it with them, share the opportunity. We'd be happy to talk to them. We'd be honored for a referral from somebody that you know and trust. So thank you for your time today. We really are grateful for you coming out and sharing it with us.
Yeah, thank you so much, everyone. And we will see you all probably for the investor lunch in Connecticut.
Yeah.
Thank you.
Thanks, everyone.
Thank you.
Have a good night.
Thank you.